Hey guys, what's going on? It's your boy MakeFX, and today I'm going to be talking about why traders fail prop firm accounts. Look, we've all been there. I've definitely been there. You waste time, you lose the accounts, you just don't get the payouts. Like, there's so many reasons why you don't get those payouts and you don't get those funders, and here I'm going to list the reasons why. All right, so why most traders fail prop firm challenges. So the thing is, like, so you know the rules, you still break them. You've blown accounts, you spend thousands of dollars on challenges and you get nothing in return, or you pass the challenge, you fail the funded phase, and you never get the payout. It's the same mistakes, but you're using a new account. Thing is here, it's pain going into system, it's freedom, right? So you've got the pain at the start, you've got to build a proper system you can adapt to, and then you can get that freedom part. All right, step one, continuation. So this first phase tells you where the market is going, right? You're reading the existing momentum. If the market isn't going anywhere or it's choppy and it's all over the place, then you've got no validation for your trade. You've got no bias for your trade, right? For me personally, I don't really deal with reversals that much. I've just always stuck with continuations. That's been the best for me. That's treated me the best. If you do reversals and it works for you, well done. But for me, it just like simply doesn't work. Skipping this step, I feel like entering blind. So you've got no direction, no edge, and it's just like a pure guess. As I said, like if price action is just moving all over the place, then how can you like expect a trade to actually go a winning trade, right? This, in my opinion, is where the most prop firm failures actually happen. So traders enter against continuations, and then they wonder why they lose, right? Here we've got a continuation sort of trend, I guess. We got higher lows, higher highs, right? Like it's easy. This is predictable. This is like the trend is your friend. This is predictable. As soon as price is sort of just choppy and all over the place, I mean, where is price moving from here, right? You can see from this point on, it's just stuck in this box. Like there's no real trend. There's no real momentum. You can take so many trades here that will just be a loss. It breaks even because there's just nothing. There's nowhere for price to go, right? So continuation number one is the biggest thing for me. All right, now we've got step two, which is consolidation. So this is a bit of a surprising one, but one has worked for me as well. This second phase tells you where the market going nowhere. So like if it's not doing anything, it's consolidating again, like it's not really going anywhere. It's a similar sort of plays on to the continuation part, but this part is important. This is the patient phase. So if it's consolidating, you're not entering. As I said, why would you enter through a trade where you have no idea where price is going? There's no momentum, there's no trend, there's no nothing. Like it's just sideways price action. It's like a barcode. Um, it'll go nowhere. You'll struggle to have winning trades. If the traders see consolidation and they force a trade, so forcing the trade is the worst part. Like, would you consider this a break of structure? I mean, sure, you could, right? But we can see overall we've just been stuck in this box here. Like nothing has really moved on from here. From here, maybe we could take a trade, sure. Once this has reached like outside of that box of consolidation. Like for me, when I live trade, it's really helpful. I actually legitimately write a box out like this. Um, just to show that price really isn't going nowhere. And I'll extend it out like this. And so if price continues to just move around in here, I know not to take a trade, right? But if price moves out like it has here and then it continues forward like this, then I can see myself taking a trade like this. So in this consolidation phase, I don't touch any trades. I don't see any reason to. Um, going nowhere, and it'll only disadvantage you rather than help you. Step three, we've got liquidity. So this third phase tells you where your entry is, and you need to know where liquidity is before you enter a trade, right? So like there's that saying where if you don't know where liquidity is, then you are the liquidity, you are the exit liquidity. So yeah, without understanding this, you will be the exit liquidity. You'll be the one providing your money to the other people, the successful traders in the market, and you don't want to be that person. No one wants to be that person. Thing is, combining all three of these phases means you know the direction, the timing, and the entry before you actually click buy or sell, right? Here we can see an example trade where we've got a continuation, yep. And then we've actually got a liquidity sweep. So we know that at this previous low, where a lot of orders do rest, come in, we've swept that liquidity and we've shot up, break of structure in this continuation like trend trade. Then from there, we can place our order, right? So we know that liquidity has been swept. This one for me, if the continuation is so obvious, I don't necessarily need a liquidity sweep. But as I mentioned, it's always good to know where liquidity is. If you don't know where liquidity is, um, you'll struggle in trading. Liquidity in trading is like probably the biggest thing that you need to learn. It's that and market structure. But so many people underestimate liquidity, like they just follow a strategy blindly, not realizing that liquidity is the thing that moves markets. It's the things that like banks and market makers, like that's um they need to provide liquidity and everyone needs to provide liquidity in the markets and need to know exactly where it is. All right, recap. So working the three together, the three working together. We've got continuation is the direction, consolidation is the timing, and then liquidity is the entry. So these three answers creates that one system, right? And this can apply to pretty much every single strategy, like in Forex at all. This applies to my strategy. This will apply to day traders and scalpers. I mean, everyone needs trend, everyone needs liquidity, and everyone needs the timing of their trade, right? So this is how and why I stopped blowing prop firm accounts. I stopped guessing and I started waiting for all of these to align. I stopped thinking that just a break of structure was enough or just a simple liquidity sweep was enough or anything. I added this to my system. I followed my system. I stayed patient and I passed prop firm account. Genuinely as easy as that. Have all three, take the trade. If you're missing one, you sit on your hand. Look, you can avoid liquidity sweeps if the trend is so obvious, right? Like if it's so obvious, then I will not worry too much about the liquidity sweep. But the trend is not so obvious like it is here. Like we can see that there is a bit of consolidation and then we move up and stuff like that. So a liquidity sweep here is favorable. So as we can see, we've got, yes, we have continuation. Yep, we've got a continuation trend. Consolidation and liquidity sweep. Yep, we can see there's consolidation here. Price had taken out this sort of consolidation box. Price shot up, break of structure, we get tapped in and we hit the trade, 3 risk reward. It's easy as that. If you're not applying every single rule to your trading, and you're skipping out on half of the rules or like a lot of the rules, then you'll struggle to see consistency in trading and you'll struggle to see profitability. I'm going to show you some live trades now so you can see how it looks on the live charts. All right, as we can see here, we've got Australian dollar, Swiss franc. So this is actually a pretty good example just because of how clean price action is. Really. So I won't go over these trades too much, but as we can see, like it does also follow the trend. There's liquidity sweeps in both of them. There's breaks of structures, gets tapped in. It's like pretty much a perfect trade all around. We'll move into this one because it's a bit easier. So as we can see, we've got from this point on, there's a massive liquidity sweep, right? Price had come down, grabbed this liquidity and instantly shot up. You can see we had a break of structure. Yep. You can see we had a decentish consolidation range here where price from this high to this low didn't really like make major moves. We've come down, we've grabbed the end of that liquidity, shot up, and we mark our trades out. 0.75 risk to reward. Trade gets tapped in, and then within like a day, yeah, 2 days, price hits that 3 risk to reward, right? That's that one trade. I'll show you the next one. All right, for this next one, we've got British pound, US dollar. So as we can see here, originally we've got this uptrend here, and then we can see that these price points had break-in structure, the downside, right? So this way, in my brain and in my system and in my thinking, this is now a continuation trade because these breaks of structures have occurred, which means we're now in a downtrend, right? If price had moved like this, where um like this, I wouldn't really take this trade from here on because this is our low, this is our new high, and then there's a new low. There's not a new lower high yet. This to me is a reversal trade, right? But right here we can see price had finished sort of moving on that uptrend, and we've started to hit this downtrend here. Mark out our points. Got a break of structure to the downside. have a decent liquidity sweep here. We can see it's a minor liquidity sweep to me. That sell. And then ultimately take profit is hit within about a week. So like it all follows the rules. It's like we can see also here this kind of smaller sized consolidation where price had wicked up, grabbed it, and then like pretty much instantly shot down, right? Like we can see these fair value gaps. Look at these fair value gaps all the way down here. So those three things in your trading, apply them in your trading, and you'll see a lot more consistency and profitability in your trading. If you're not consistently following your system and your plan, especially with your funded accounts and you're trying to pass accounts, and you're just rushing them or over trading them or whatever you're doing, and you're not following like a normal process that you would if you're live trading, then I mean it's no wonder that you're failing the prop firm accounts. I mean, why would you expect to pass them if you're not even following your system? So follow your system, be consistent, and you'll be surprised how quick you can turn profitable and how quick you can pass a funded account.